Are the gold and silver bull markets over? After a year like this, it's a fair question. But when you strip away the noise, there's very little evidence that the trend has ended. Yes, gold and silver can pull back. They always do. Nothing moves in a straight line. But the forces that started this move are still very much in place. Central banks, especially in emerging markets, were the first buyers. They haven't turned into sellers. And the reason they started buying have only become stronger. After 2022, something important changed. Central banks stopped increasing their dollar reserves and accelerated gold purchases instead. This wasn't about chasing price, it was about risk. Frozen reserves, exploding fiscal deficits, and governments quietly choosing inflation as the least painful way to deal with debt. Retail investors followed, first in Asia, then Europe, and then finally in North America. And unlike past peaks, there is no sign of exhaustion, panic, or speculative frenzy yet. Here's the key point that most people miss. In regime shifts, recent history becomes a shackle, not a guide. Gold's rise this decade feels dramatic, but it pales in comparison to the late 1970s when inflation stayed elevated and real assets dominated returns. And gold may not be alone this time. As inflation risks re-accelerate, commodities are starting to break out. Copper, aluminum, tin, energy, agriculture are all pushing beyond multi-year ranges. Markets are not positioned for this, and that's why it matters. Stocks and bonds are enormous markets. Commodities are very, very tiny by comparison. Even a small shift into real assets will not trickle in. It'll hit like a fire hose through a straw. Gold has led the cycle, silver amplified it, and the next phase may be broader, not because people are bullish, but because they're trying to protect their purchasing power in a world drowning in debt.